In last financial year, ITC gave a dividend of rupees 10 and 5, that is a total dividend of rupees 15 per share to its shareholders. Its share price was hovering between rupees 200 to 220. In this video, we are going to discuss what is dividend investing, the pros and cons of dividend investing. Hi guys, this is Kritesh and welcome to TradeWin's YouTube channel. Now let us first start by understanding what are dividends. So dividends are basically a portion of the total profit that a company makes, which is distributed among its shareholders and which is decided by the board of directors. So let's say a company makes a total profit of rupees 100 crore in a year and the board of directors decides to distribute 30 crores among its shareholders. And let's say there are 30 crore shares of that company. So for every share, the shareholder will get a dividend of rupees 1. And if you are holding 1000 shares of that company, you will get rupees 1000 as dividends. So this is the basic concept of dividends. So we have already seen the example of ITC where it gave a dividend of rupees 15 per share. So if you are holding a total of 10 shares of ITC last year, you would have got rupees 150 as dividends, which would have directly credited in your bank account. Similarly, Infosys gave a total dividend of rupees 21.5 in last year. So if you are holding 100 shares of Infosys, you would have got rupees 2100 as dividends credited in your bank account. So this is the basic concept of dividends. Now let us understand the pros and cons of investing in the dividend stocks. Let us first start with looking at the pros, that is the advantages of investing in dividends. First, dividend works as a passive income. So if you have invested in good companies, you will receive regular dividends from them. And here you do not have to do anything. The dividends will directly get credited in your bank account. So it serves as a passive income and you do not have to put any extra effort to get dividends. Second, double profits. So in the case if you are investing in dividend stocks, you will get the benefit of both capital appreciation and the dividend income. So let's say you have invested in a stock whose current price is rupees 100 and after the end of a year its price moves to 120. So here the capital appreciation is 120 minus 100, that is rupees 20. So you get a 20% gain as capital appreciation. Along with it, let's say the company also gave rupees 3 per share as dividends. So here you are getting double profit. You are getting the benefit of capital appreciation and the dividends, and the combined profit for you will be 20% from the capital gain and 3% as dividend, that is a total of 23%. So while investing in dividend stocks, the investor gets double profit, that is from the capital appreciation and also from the dividends. Third, it acts as a defense against bad market. So there may be scenarios when the stock might not perform well and you won't get any capital appreciation. So let's say in a year the stock price doesn't move at all. However, if it gives a regular dividends to its shareholder, in that case the dividend can work as a hedge against the bad market. So even though the share price of that company hasn't moved, however, if you get something as dividends from that company, you would make some money and some returns in that year. Fourth, it works as a steady income. So if you have invested in a good company, good stock, you would get a regular dividend from that company. And here you do not need to sell off your stock. So in the cases of capital appreciation, you have to sell your stock to book profit. So let's say if you want to make money in a stock which does not give dividends, the only option for you is to sell that stock. However, in the case of dividend stocks, you can get a regular dividend year after year in your bank account. So again here, the dividend stocks can work as a steady income source for the investors. Fifth is the dividend reinvestment. So when you get dividends in your bank account, you can use this amount to invest in alternate investment options. So let's say you are getting 2%, 3% dividends in your bank account. You can use this money to invest in mutual funds, tax saving funds, or even reinvest in that same stock. So again, by investing in dividend stocks, you get an option to reinvest that money in whichever source, whichever investment option that you prefer. And sixth and final benefit of investing in dividend stocks is the long-term investment. So if you want to get benefit of the dividends, you have to stay invested in the stocks for a long term. The board of directors will announce the dividend dates, that is the dates on which they will give dividends to their shareholders. And in order to get that dividend, you have to stay invested in that stock at that time. So if you are planning to get regular dividends from a company, you have to remain a loyal shareholder of that company and stay invested for a long term. So in short, dividend investing inspires people to invest for a long term, which is always a good move. So now that we have looked into the pros or advantages of investing in dividend stocks, let us also look at some of the disadvantages or what are the cons of investing in dividends. First is low growth companies. So most of the matured or low growth companies could give good dividends to their shareholders. This is because they do not need to reinvest the money in their company. So let's say for the growth companies who are growing at a very fast rate, they will want to reinvest the profit that they made everything back to their company. So if they made a profit of 100 crores, they will want to reinvest that back in their company to maybe expand in new cities, to start a new project, or even launch a new venture. So in that case, the fast growth companies might not give any dividends. On the other hand, low growth companies which are already matured like PSUs or large cap companies, they might give you steady dividends. So in short, if you are investing in dividend stocks, there's a lot of chances that you are investing in low growth companies. Second is the high dividend payout risk. So in a lot of cases, companies might give a high dividend payout. So let's say if a company made a profit of rupees 100 crore and out of 100 crore they may give 80 or 85 crore as dividends to their shareholders. But this may be a wrong move. This is because if you are giving 80 to 85% of your profit to the shareholders, the company is reinvesting very little amount in itself, and if it is not reinvesting in itself, this means that the company might not grow at the same pace in the future. So this can create a problem for the shareholders, because if the company is not growing, its profit will not grow in the future, which means that they may face some dividends issue in the future. So a very high dividend payout, that is a payout of 80 to 85%, may be bad for the shareholders, and a decent dividend payout can be 40 to 45% of the total profits. The third disadvantages of dividend investing is the taxation. So according to the new rule in the 2020 budget, the individual shareholders has to pay taxes on the dividends based on their income tax slab. So every year when you get a dividends from the shares that you are holding, the investors have to pay taxes on the dividends that they are getting. And fourth and the biggest disadvantage of investing in a dividend stock can be the dividend cut. Now the thing is that dividends are not mandatory for a company. The board of directors may or may not decide to give any dividends to the shareholders, and in the cases where the board of directors decides not to give any dividends, it can be bad for the shareholders whose sole purpose for investing in that company was the dividend. So the biggest disadvantage is that dividends are not mandatory, and there may be cases when dividends are not given at all in a year to the shareholders by that company. So now that we have looked into the pros and cons of investing in dividend stocks, let us also discuss the scenarios when you should exit a dividend stock. So let's say you are holding some dividends. What is the time when you should sell off that stock? First is when the dividend starts declining. So the reason for you to invest in a dividend stock is to get regular dividends, and if the dividend starts declining year after year, or if the dividends are inconsistent, in that case you may decide to exit that company and sell off your stocks. Second is high dividend payout. As we already discussed, if the dividend payout of the company is very high, let's say greater than 70%, in that scenario again it means that the company is not reinvesting a lot of money in itself, and it can also be treated as a scenario when the investors should be cautionary about that dividend stock. And third and final is when there is an adverse change in the dividend payout policy. So let's say a new management or a new board of directors comes and they changes the policies of dividends, and which is not in the favor of investors, then this may be again a scenario where the investors may decide to exit that dividend stock. And fourth and finally, when the fundamentals of the company starts declining. If the total revenue, net profit, margin, everything about the company starts declining, its fundamentals starts declining, it again means that the company might not be capable to give decent dividends to the shareholders in the future, and this can also be treated as a scenario when the investors should quit that dividend stock. So let me quickly summarize what we discussed in this video. Dividend stocks are a good way to generate steady income from your stocks without selling your stock or without booking profit. However, there may be also few disadvantages of investing in dividend stocks, for example, high dividend payout or dividend taxes, or even the scenarios of dividend cut. Therefore, the investors who are investing in stocks for the sole reason of getting dividends should be cautionary about that stock and always choose a very good stock to invest in the share market. So that's all for this video. I hope it was useful to you. Do let me know what you think about dividend investing. Do you invest in stocks for dividends or not? Comment below in the comment section. And if you enjoyed the video, please hit the like button. This is Kritesh signing off.